Hey guys, I'm back in beautiful downtown Ventura, California for a while again. And I want to tell you something urgent that couldn't wait for me to get back to the Florida office. So, have you seen the recent headlines? Stagflation is back on the radar, and the markets are going to feel the heat. They're starting to feel the heat. Growth is slowing down, inflation isn't retreating fast enough, and the Federal Reserve is in a tight spot trying to manage both without triggering a recession. And guess what? Investors are caught in the middle of this confusion. This economic schizophrenia, where inflation stays high but growth stalls, is called stagflation. And it's not just a buzzword, it's a serious threat to your investments, especially for retirees and those nearing retirement. You see, the inflation element of stagflation erodes purchasing power, but the potential recessionary aspect of it also makes traditional investment strategies like bonds or even tech stocks incredibly risky. You must remain invested to beat inflation, but where do you go when the Fed is trying to slow down the economy? You must understand that stifling inflation and keeping business and commerce expanding, those two things are diametrically opposed targets. And if you study previous periods of stagflation, you'll see the markets behave schizophrenically during these times, depending on this kind of push-pull. Inadequate job growth, and it's recessionary, and the markets break. Fed says he's going to lower interest rates, and the markets will explode on the low interest rates until inflation keeps pushing young people out of the housing market while impoverishing even more people. And then here comes consumer confidence and less consumption out the bottom. Anyway, maybe somewhere the whole system breaks. I don't know. So what's the biggest risk? If you don't understand how stagflation can quietly drain your wealth, you could end up losing more than you think. Many sectors like real estate and tech they're already showing signs of strain, while utilities and energy are faring better. But how do you adjust your portfolio without falling into a trap? That's exactly why I created a comprehensive 50-minute training that I recorded over a year ago just for our clients at Straight Talk Wealth. In it, I dive deep into the dangers of stagflation, and I lay out specific strategies to protect your wealth. And let me tell you, now, more than ever, clients of ours, or not, understanding inflation or understanding stagflation, or both of them, is critical. And the coolest part is that when you watch the video training, you'll see that over a year ago, I did nail exactly what you're seeing today. Wait, no, that's not the coolest part. The coolest part was that when I was researching the training on stagflation, I did discover one asset class that has historically had its very best performance during stagflation. It's a totally reliable strategy that's built in to beat inflation when the markets are falling from high interest rates, and yet make a bundle when markets come back from the bottom. It's a way to profit for both economy busting high interest rates and yet poised for resurgent markets when rates come back down. So hit the link below and don't let these economic landmines catch you off guard. The training is totally free.